what would convince you that they're in that normalization of growth, that they're in the quote unquote run phase? What sort of signals are you looking for?
Yeah, with Netflix specifically, more signs of traction in more established markets where you really have to see those monetization initiatives hit, whether it's paid sharing or advertising. Advertising's frankly more of a second half of 2024 catalyst at this point. You heard Greg Peters, the co-CEO, talk about just refining the product set right now, moving up to higher definition quality within the plans to really drive adoption. And it's still very early innings in building out the ad tech stack, the plumbing, if you will, that makes sure the right consumer is getting the right ad, which drives returns for the advertisers and ultimately higher pricing. That's not something where you flip a switch and start monetizing a lot on day one. That's going to take, call it another 12 to 18 months to build out. On the paid sharing side, there's going to be a lot of watching on just how that is trending over the quarter. One nuance that could occur within the US market is just kids coming back from college. If everybody's in the same household, it doesn't make a heck of a lot of sense to be paying for one extra membership in there or for the kid to just go out and subscribe themselves. So paid sharing is probably a little more skewed to Q3 and even Q4 for when you see the benefit. If that turns into a much bigger product cycle than we thought, then free cash flow goes higher and the stock looks more interesting. But right now, it's hard to see that.